stock up more than 18%. Vineet Bolinskar, Head of Research at Ventura, joining us. Vineet, talk to us about this entire waste management theme as a whole. You know, as the economy matures and as we get to maybe $3,000 per capita and 4,000 onwards, waste management will become a key, and that's what a lot of market participants seem to believe. Anthony Waste as a company, in your opinion, and this entire waste management theme, do you expect it to play out in a big fashion, be a disproportionate trade to play out over the next 10 years?
So, what happens is that, they enter into contracts which are locked in. They've got very high ROEs, and, they earn long-term ROE over, for several years. And, you will not find these kind of comparable metrics in many of the stocks. So I think Anthony Waste, if handled well, and, if it walks the talk as they have been doing so far, can turn out to be a mega spinner. I think the waste to wealth, trend is very, very prominent. And as increasingly more, municipalities join the bandwagon, I think the opportunities are only going to go up. And Anthony Waste is going to be one of the best stocks to play this trend.
Okay, so that's the take coming in on Anthony Waste and that entire theme. But on that note, viewers, time to slip into a very short break, and we'll keep the conversation going with both our technical and fundamental expert on the other side of this very short break. Eyes are on TCS today on the back of the key takeaways from their analyst meet. Before we go across to Vineet and get a fundamental view on TCS and the overall IT space, I just want to mark the fall that we've seen in the Nifty once again. 115 points lower from the day's highest point. Kunal, it seems like, thank God, it's Thursday, it's jinxed by us now. Spoke too soon on that one. But almost 0.1% lower, 25,783 is where we are at. Sharp fall in the Nifty Bank as well. It's seen a little bit of a pull. Sensex also seeing quite the drawback coming in right now. Cuts on Sun Pharma, Power Grid, Bajaj Auto have intensified. So that's the take coming in on the market, a little bit of a drawback right now. But we need coming back to IT, and let's keep that conversation going. TCS in particular, if you have a view over there and the overall IT sector, given that on one hand, we are still not in the race for AI right now, but on the flip side, the pressure in the rupee is actually making IT look slightly attractive compared to the other sectors. Your view on this?
So, we have been, consistently avoiding this sector for a very long time. But for the first time, the way they announced their AI stack and, kind of revenue it is generating, and also the fall which it has benefited from, it has given a new lease of life to its, its EBITDA margins. Second thing is that, we are hearing a lot of negativity in terms of the the FANG stocks, how they are stretched for cash. So that gives us a lot of room for, for the technology service companies to build on. And for this, we are looking to, generate a hold on these companies rather than going with the buy recommendation.
Okay. Vineet, one sector space that you're super positive on at this point?
Absolutely, it is going to be hotel stocks. I think there the strength continues to be strong, and the tourism is also uphill now. So we believe that this will continue to do well.
Okay, so that sounds good. We need the hotel space is something you're liking. Kunal, stack up something like an IHCL versus an ITC hotels. Now, limited chart history for ITC hotels, I understand. But if you want to throw in a Lemon Tree, a Chalet, and which one is looking attractive, at least on the charts?
See, I think Lemon Tree and Chalet are the ones which are still looking relatively strong as compared to Indian hotels. But then Indian hotels is going through a time-wise correction and a price-wise correction. The stock which I think from 150.60 in 2020-21 I think had moved towards 800, 850 plus mark. And I think from there, we've seen the stock in the last 12 months broadly going through a time-wise, price-wise correction. So it's not as if that the stock is very, very weak on the charts or you're looking at a major reversal of sorts. But it's just that the stock, because of the way the stock had rallied in the last 4-5 years, is going through that mean reversion phase. So far, Chalet Hotels, Lemon Tree are the ones which are holding on closer to their long-term moving averages. They were about their moving averages, 200-day moving average, just about a couple of weeks back. But then with this recent leg of the market correction, these stocks have ebbed off a little bit. But I believe that the entire sector still looks quite okay. ITC Hotels, yes, the stock has seen has a limited history. But I remember, I think from 240 or 50 levels in start of this year, the stock has cooled off to sub 200 mark. But again, I think a zone where the medium-term charts so far over the last 4-5 months indicate that we are looking at a point where the stock may find some bit of a support at current levels. So the space looks quite okay. So far, you're looking at Chalet as well as Lemon Tree being one of the stronger ones. But I believe there will be a time where Indian hotels will break past about this series of underperformance and then start to act as a leader, which it did in the good part of the last 4-5 years.
Expense ratio tweaks, and that's keeping all of the AMC stocks in focus. HDFC AMC is up nearly 7, Nippon Life is up 5, Prudent Corp is up 4, UTI AMC is up 3. So you're seeing good traction on all of them, and you'll have a new listing tomorrow, viewers. You'll have ICICI Pru Life AMC as well, which comes, which will come and list itself on day one of listing for it tomorrow. Vineet, this expense ratio tweak, obviously a positive versus the draft, so that is understandable. But with regard to just underlying valuations, your opinion, looking elevated, looking okay for the kind of returns that we've seen on some of these counters, and to expect maybe a double-digit return from here for the next 3 to 5 years, is that something reasonable enough to expect?
Yeah, so it's a $1 trillion growth growth path for these companies, and we believe that while they look expensive, but surely the traction that we see in and kind of double-digit growth that we are going to witness, I think these stocks will be part of a portfolio. If you want to play the consumption space, the best way to play it is going to be the AMC stocks, and the Prudential ICICI AMC stock looks very, very good at this point in time.
Entire AMC space. Interesting take coming over there. If you want to play consumption, AMC would be a good route to do that. But on that note, we'll slip into a very short break and track the last 1 hour of the markets on the other side.
Welcome back, and we're also joined by Arpit Beriwal. Of course, Vineet Bolinchkar as well as Kunal with us in the studio. Arpit, talk to us about some of these AMC counters doing very well for themselves in trade. Anything significantly changes, in your opinion, on chart structure? The 7% move on an HDFC AMC?
Very good afternoon to all. So if you look at the AMC stocks, if you look at the chart structure, particularly HDFC AMC, so from last almost 4 to 5 months, it was moving sideways. However, in last couple of weeks, the stock has corrected from 2,900 to 2,600, and we have seen a very sharp recovery from the lower levels. So I think looking at the monthly setup of the HDFC AMC, so definitely a base formation has been done on the monthly time frame because it's in process of falling bullish pin bar, which suggests that buying interest is visible at lower levels. So 2,600, 2,550 would be a major support zone for HDFC AMC, and from here on, once it closes about 2,750 levels, definitely the uptick can be seen to its previous all-time high towards 2,800 levels. So looking from the chart specific, HDFC AMC risk road looks quite favorable with major support around 2,600 for an upside move towards 2,800 and then potentially 2,900 plus zones.
Okay, so that's on the AMC stocks. Arpit, any view on Ola Electric? The stock is lower by about 5.5%. Does this indicate overall structural weakness on the charts, or do you believe now, because of the kind of profit taking the stock has seen, there could be a legs to maybe some sort of an uptick here?
Yeah, so interestingly, if we see the chart structure of Ola Electric from last almost 16 months, the stock is in clear downtrend. The structure of lower highs is intact from last. In fact, we have seen some recovery in the month of September series from 35 to 60 levels, but that selling pressure has again we have seen at the higher levels. And if you look at the setup wise, on the weekly and the monthly setup, there's no major reversal as trading at 52-week low. So I think it's better to wait and watch and try avoid catching a falling knife. Immediate basis, a major hurdle is around 36, 37 levels. Until the stock doesn't surpass above 37 levels, our stance would be negative bias. So better to wait. Any closing above 37, 38 levels would change the short-term structure. But till then, the negative bias will be still there in the stock.
Okay, so that's on Ola. Vineet, what's your take with regard to an Ola?
So, I hate to admit it that we were optimistic on this stock a while ago, when they for Q1. But, since their Q1 traction, nothing is materialized. And in fact, they're losing market share to the other peers and competitors also. And after the sell-off by the promoter, I think very little holds for this stock. So, we are also exiting this counter because we don't believe that there is much to be made out of.
Just broadening that view, we need to some of the other EV two-wheeler players, your Bajaj Auto, Hero, Ather, for instance. Are you positive on any of those names?
Actually, we are positive on all the three names. Hero has, come back remarkably. Ather, being a one-trick pony is doing really well now, and they're expanding their market share in North. So, I think, Ather holds great promise for the future. And we think that among the three large cap, motorbike stocks, I think Hero looks to be valuation wise extremely attractive.
Okay. All right. There's also, among other counters that are buzzing, there's also Walchand Nagar, and that one is buzzing on the back of the nuclear bill which has been passed, or the atomic energy bill that's been passed. Vineet, I'm curious to know what within the nuclear value chain are you looking at? Because this could well be not a story which could unfold in a year or two, but it could begin unfolding in a year or two, if at all. That is something that we can consider. What within the value chain would you like, and what would your picks be? How do you play nuclear?
So, immediately in the talking in the short run, I think the infrastructure stocks will do very well. And here we think HCC is very well positioned. Uh, HCC has got rich experience in doing your renewable products and projects also. And right now, the 1,000 crores that they've lapped up in terms of rights, and they are virtually debt free. And they've got a good, traction in terms of order book picking up. So we like this stock from the risk reward perspective. And this will be my immediate stock to go because all the other ancillary players will come in after some time. They will not catch fire immediately.
Okay, so that's the take on Walchand Nagar as well as HCC that you were talking about, some of the participants of this entire nuclear atomic theme. Arpit, I don't know if you track Walchand Nagar on the charts, but if you do, if you could provide us a chart check on that and some of the other players from this space like HCC and perhaps an MTAR Tech, how are they shaping up on the charts?
So if I look at the chart section of Walchand Nagar Industries, so from last almost 8 to 9 months, the stock is trading in a very tight range between 178 on the downside, whereas on the upside around 230 levels. So on the weekly setup, good recovery we have seen from the lower levels, kind of a double bottom. However, the confirmation is still pending above 214 levels. So 214 is the level is to watch out for. Closing above 214 would definitely show as short-term bottom in place for an up move towards 240, 250 levels. So 214 is a key level for any positive movement on the upside. Along with that, if you look at the chart structure of HCC, So if you see the chart structure of overall HCC, the stock is in clean downtrend. And if you look at the setup on the monthly scale also, the structure of low rise is intact. There's no major momentum. Weekly structure also from low rise, low lows. It's better to avoid this count at these junctions and better to stay with the selective outperformance counters within the similar space. So HCC would be a kind of a sell on bounce with upside major around 22 levels.
Okay, so that's the take on some of those nuclear participant, those theme stocks on the charts as well. But on that note, we'll slip into a very short break. On the other side of the break, we'll talk about the kind of weakness that we're seeing in Sun Pharma today and get you a fundamental and technical view on that, along with a bunch of other stocks that are in focus. So stay tuned and we'll be right back. Back with closing trades, and like promised before the break, let's take a look at Sun Pharma and the kind of profit taking the stock has seen today. A little bit of a cut coming in on the stock price, and that's intensifying actually, because last time we checked, Sun Pharma was low by about 2%, and that has intensified slightly, a 2.8 to 3% cut coming in on Sun Pharma. Now this is on the back of its Baska plant, which is in Gujarat, that has received official action indicated classification from the US FDA after they conducted an inspection at the company's plant in Gujarat, and this was from the 8th of September to the 19th of September this month. Now this is slightly negative coming in for the stock, because let's understand what this plant does, what the operations are over here. This plant is one of Sun's 30 plus operational plants right now, and some of the plants that are currently under warning letter from the US FDA, and this only spells more trouble for someone like a Sun Pharma, because it has the Mohali, Dadra as well as Halol facilities under US FDA pressure. There are facilities in Ohm, which is in Hungary, Haifa, Brampton, Billerica in the US. All of them are clear on the flip side to continue their supply to the US. So slightly bad news coming in for Sun Pharma today on the back of this US FDA action coming in. Remember, in 2019, the stock went down 1% based on the US FDA observation for the Baska facility. So this is not the first time that this plant has seen some US FDA action coming in, but the stock reaction is slightly intensified today compared to the last time we saw a US FDA inspection outcome on this facility, a 3% cut coming in on the stock today. Kunal, how is Sun Pharma shaping up on the charts? A slight draw down today on the charts. Good time to buy?
Well, maybe not a good time to buy, but I think it's a good time to start nibbling into the stock price in a staggered manner, because when I look at the pharma index, most of the pharma stocks are actually at a verge of a breakout for themselves, whether it's the likes of Lupin, Cipla is going through a turnaround, Aurobindo Pharma, Glenmark, etc. So I think in that context, when you look at the pharma index, there are strong signals that potentially going into 2026, this could be a sector which can show signs of outperformance. So I think in that context, yes, the 100 odd point drop for Sun Pharma from its recent swing highs of 1840, 1850 levels, I think is a good opportunity where traders could start to nibble in.
Vineet, pharma at all on your radar with regard to, and Sun Pharma in particular, given this 2.5% odd cut?
So, let's look at the larger footprints that are building up. One is the fact that, internationally, there's going to be a lot of pressure on companies which do not build in the US, although we are seeing all that happen. So, to a certain extent, that is going to, pressure or level the margins. Secondly, what negative we are facing in terms of Sun Pharma is not that very encouraging. But, within this overall pharma basket, I think the companies which excel in doing complex research and who have got majority of their operations based in the US are expected to do well. Here, one company that comes to my mind is Jubilant Pharma. I think that has got a very, very good, strong pipeline of research and localized manufacturing plants, and they've got significant moats because they're some of the only players in the industry. So I think you have to be very, very picky and choosy, and you cannot go generally with a overall generic approach with pharma stocks.
Okay, so that's on Sun Pharma. But Kunal, what about some other pharma stocks from this pack right now? Let me just pull up some of the names from the pharma pack and let's see a little bit of a long-term view on some of these charts. So on the year-to-date basis, Laurus Labs on the diagnostic side is up 68%. Glenmark has done well, 21% move over there. And then you have Torrent and Biocon from the Nifty Pharma pack on a year-to-date basis. These are some of the top performers. Kunal, where do you think the rally has outlived its time, or on the flip side, where do you also think that there are more legs to the upside for some of the names?
So I'll take the latter one because I believe there are more pockets of fresh breakouts which are emerging in the pharma stocks. Now, for example, Biocon, something which you mentioned, that stock in just the last 2 or 3 months has seen a very good 20% jump broadly from 330, 340 levels to almost 400 levels with the stock recently tested. So which means that the stock in the last 1 or 2 months has managed to regain what it lost in a good part of this entire calendar year for the past 8 to 10 months. And that stock has confirmed a breakout on multiple time frame charts, weekly, monthly, as well as on the quarterly basis. So that's something to look out for on the medium to long term basis. And then the traditional pharma names, the larger cap names, for example, Lupin. I think that stock, after a fabulous 2024, I think has gone through a bit of a tepid 2025. But then when I look at this in terms of the potential structure for the last 3-4 years, it indicates that the stock has ended that phase of a minor consolidation and could now start to look very attractive in terms of a potential breakout. Glenmark Pharma has already corrected almost, I think, 15% or more than 20% from its recent highs of 2,250, 300 levels seen in the month of July, August somewhere. So I think in that context, many other pharma stocks are now looking quite ripe for a potential breakout. If I have to pick and choose, depending on the beta structure for these pharma names, I would give more preference towards the likes of Glenmark, Lupin, as well as Biocon.
Okay, on that note, viewers, once again, time to slip into a very short break. More conversation on the other side. Stay tuned.
Welcome back, and you're watching ET Now, and this is Closing Trades. We're joined, of course, Arpit Beriwal continues to be with us from Motilal Oswal Financial Services, but we also are joined in by Sunil Subramaniam, who's an independent market expert. Sunil, the move with regard to some of the AMC counters, you believe overdone with regard to the revised regulation, because the impact is not as large. So yes, mild positive, but is it that large to warrant a 5-7%, the kind of moves we are seeing?
Yes, I think that if you look at it compared to what the consultation paper had proposed, there's been a significant up move. First is that they were allowed 6 bips for the stockbroking charges. Second is the cut was originally at 15 bips, it's now 10 bips. And I think it's clearly been made out that the brokers, the distributor commissions would come down proportionately, and that's why the TRs have come down. So I think for AMCs, I think that they should be easily able to manage with these kind of things and passing on the any reductions to the distributors who sell their products. So I think that the move from SEBI, is ultimately a positive for the listed AMCs.
With regard to some of the other movers, there's also a PB Fintech, Kunal, which is up 4% in trade. Now we've been having our eye out on this one, in fact, since yesterday morning, and we've spoken about this multiple times since over the last couple of days. In fact, from closing on Tuesday. What do you make of the move? Because we saw sustained weakness for a couple of days, and now we've just seen a rebound. So trying to understand whether anything's changed here.
So what happens is, when a stock goes into a sharp correction, it tries to tap back into a support territory, where it tries to find that where are the supports, where are the demands, where buyers overpass the sellers for the stock price range. That apparently for PB Fintech or Policy Bazaar was almost close to that 1800 levels. In fact, 2 days back, when the stock was at levels of 1835.40, we were expecting the stock would go into maybe one more round of selling pressure, try and establish a support at the round figure mark of 1800 levels for the stock price, and then go into a process of a bounce back. So it's a natural reaction for the stock price after that 2 days back of a sharp sell-off or a correction for the stock. I believe that a second retest towards that 1800 mark could be in the offing for PB Fintech. So I think at current levels, the bounce for the stock is because of the oversold indicators on the short-term time frame. Eventually, what happens is post this cool-off rally for the stock price, the stock goes into a gradual consolidation as well as a price correction, and then forms the process of a real bottom for the stock price. That I believe is some time away. So my expectation is that the stock is likely to go into a further round of correction and a potential retest to that 1800 mark.
Okay, so further correction in store for PB Fintech, according to Kunal. That stock is up 4%. But let's zoom out a little bit and talk about macros. Let's talk about the central bank action. We've had outcomes from the US and back home over the last couple of weeks. But all eyes later today are going to be on Bank of England as well as the European central bank announcements. And tomorrow, Bank of Japan is going to be in focus. Let's start by understanding what the street is penciling in back home as well as globally when it comes to the policy outcomes of all three of these central banks. Let's start by looking at Bank of England first. A 25 bips rate cut is expected. They're expected to trim these rates from 4% to 3.75%. Now, this would bring rates down to the lowest level since November of 2023. So that is something to watch out for. And also, this would be the sixth cut in interest rates from August last year. Now, remember, the target that they have set is 2%. That's Bank of England's inflation target. And the latest CPI figures that we've seen just a couple of days ago, that fell to 3.2% from 3.6% on a month-on-month basis. So let's see what the action is, because the CPI, although it's falling, is still slightly higher than what their inflation target is. So let's see what the outcome is, but largely a 25 bips cut is what the street is expecting. Shifting focus to European Central Bank, absolutely no change expected over here. Rates are expected to be unchanged at 2%. And remember, this would be the fourth consecutive meeting without a cut since June of this year if they go ahead and keep the rates where they are. And lastly, all eyes will be on Bank of Japan tomorrow, because we're expecting a 25 bips rate hike from this one. Rates are expected to be hiked to 0.75% from the half a percent mark where the rates are right now. And if this goes through, then remember, this 0.75% mark is the highest level in the last 30 years. Bank of Japan has held rates in its previous meeting that was on in the last week of October. So that could also change this time around, because we're expecting to see a 25 bips hike, and inflationary pressures continue to remain elevated due to the yen's weakness. That could be a contributing factor to the hike this time. And the new Prime Minister Sanae Takaichi had, remember, publicly called rate hikes stupid just last year, just to quote her. So this could be a complete change of stance coming in from the central bank, opposing to what the Prime Minister has said, although these comments have been curtailed in the time since. So all eyes are going to be on that outcome. And remember, Bank of Japan also releases the CPI number on the same day as the policy outcome usually. So that is also on the 19th as well, which is tomorrow. So watch out for all three of these policy actions. Sunil sir, just want to get your view on what are you making of the central bank action that we've seen overseas so far from the US. Then we had our rate outcome coming in, and the three banks to watch out for. What do you think the global economy is heading towards in terms of inflation, in terms of just macro momentum? What is your take over there?
I think that basically the world is preparing for a slowdown by being proactive on the rate cut side. So clearly the impact of tariffs as they take effect over the world, the central bankers are prepared. And I think the US led it basically because you saw the rate cut. You also saw that they're stopping the quantitative tightening. So which means that the general move is towards a surplus liquidity, which is generally a good favor of risk on, both in terms of emerging market, and hopefully some bit of it slips into India.
Okay. Kunal, I wonder what your call on the Nifty Bank in particular is, because we've seen, again, some bit of pressure on the Nifty Bank, and we're not really seeing a direction here. And I wonder that till we don't see a direction here, can we see a direction on the Nifty therefore? So how much of it is dependent on the Nifty Bank, and when can we expect a move?
Very good question, Harsh, because in the context of the markets so far, I think Bank Nifty holds the critical key for the overall market trend. Yes, when we look at the Bank Nifty overall, it's been a weaker index in the last maybe a week or so, because from that 60,000 break, we've now slipped below the 59,000 mark. So there's been some sort of a mean reversion happened. The major concern for the banking index is the lack of private sector banking stocks, even now, I think, trying to make a comeback. So there was this phase where PSU banking stocks had outrun the private sector banking stocks, and then there was a point where the private sector banking stocks were underperformers. In that leg, what happened is that you didn't see a price jump in the private sector names, but you saw a price correction in the PSU banking names. So that cooled off the ratio between the PSUs and the private sector names. Now the banking index, when I talk of it solitary in terms of the charts, we are nearing a retest of the 50 DMA for the Bank Nifty. This, I believe, is a very crucial retest for the banking index, because if we manage to hold on to this level, say broadly by a margin of 200 odd points plus minus for the banking index, then this indicates that this is still a strong index and it could make a comeback. If not, then I believe that we have to be more dependent on the other sectors like IT, for example, trying to make a comeback, select pharma stocks, which could probably try and shield the market as such. So then the dependency increases on other sectors to start to show signs of outperformance.
Okay, so that's the take coming in on Nifty Bank, the view on the PSU banks as well, and the overall contribution to the Nifty. I believe we still have Arpit with us. Arpit, your view on some of the other stocks in the financials pocket, and NBFC group of stocks. We've spoken about AMCs, but what are you making of some of the capital market theme stocks and NBFCs? How are they shaping up?
So if you see overall, if we talk about the financial index, from last couple of months, this index has been a huge outperformer, where you've seen a broad-based selling across the major indices. This sector has been an outperformer, though it has been consolidating from last couple of days. But if you look at the space, particularly NBFCs, the likes of AB Capital, L&T FS, Shriram Finance, Muthoot Finance. So now on the immediate basis, Shriram Finance looks very good on chart. If you look at the chart structure of a monthly setup for Shriram Finance, a classical pole and flag breakout on the monthly setup above 790 levels. On the daily and the weekly scale, it is holding well, where we have seen a good broad-based selling across the mid-cap, small-cap, but this space is holding well. So I think from this space, Shriram Finance is a preferred pick, and from here on also we can expect good momentum towards 950,000 level positionally with a time frame of 2 to 3 months within the NBFC space. Second within this space would be Muthoot Finance. So if you look at the chart around Muthoot Finance also, as you've seen a very strong rally from almost 3,200 to 3,700 levels. So now the stock is consolidating, but the base of the stock is definitely shifted higher from 3,200 to now the new base is around 3,500, 3,600 levels. So I think here on, after a slight consolidation, the stock can again start its up move towards 3,850, 4,000 levels. So Shriram Finance and Muthoot Finance look good from the NBFC space. Apart from that, if you see from the overall the financial pack, so relatively overall selective mid-cap banks also looks quite good within the financial space, the likes of Federal Bank and AU Small Finance. So if you look at the chart structure of Federal Bank also, Federal Bank looks quite strong on the chart. Slowly, steadily, the base of the stock is shifting higher towards 275, 280 levels. So Federal Bank within the private mid-cap private bank space, and along with that, second would be AU Small Finance from the private banking space, looks quite strong on chart. So this would be the couple of ideas from the financial space that we can watch out for next couple of months.
Okay. All right. So that's interesting. But what we're going to do is we're going to continue to stick to NBFCs, but take a short break and thereafter stick to it. We'll take Sunil's view. We'll also take Kunal's view. There's M&M Finance, which has hit the day's high, 4% higher. I'm curious to know what that one is doing and how it's stacking up on the preference list of Kunal. Let's stay with us and we'll slip into a short break and get right back.
Your reading on the charts for some of the sugar stocks, something like a Balrampur or EID or anything like a Praj Industries perhaps looking attractive on the charts?
Absolutely. If we see overall the chart structure of all these counters, whether it's Balrampur, Praj Industries. So first, if we start with the Balrampur Industry chart structure on the monthly time frame. So stock has seen a very good rally in the last year from almost 400 to 700. And now the stock has again come back to its previous support zone around 400 levels. That was the major support zone for the stock on the monthly basis. And the stock has seen some recovery from the lower levels. So I think from the positional setup, definitely it's a classical retest of breakout on the monthly setup. And from here on, the risk reward looks quite favorable with a time frame of at least 3 to 6 months from here on. So I think 400, 410 would be a major support zone to watch out for. Slowly, steadily can accumulate at this level till 400 levels, with keeping major support around 350 for an upside move towards 550, 600 positionally. Now, second counter, if you look at the Praj Industries also, so similar structure on the monthly setup. However, so far there is not major sign of reversal on the monthly setup, just first sign of some recovery from the low levels. So on the prior industry, the level that we are looking out for is around 360, 365 levels. Once the stock closes above 365 levels, then we can play a reversal play for 420, 450 move. However, looking at the both the counters, Balrampur looks better on the charts from a position perspective.
On the sugar stocks, we've just received an update wherein we understand that India is considering raising minimum sale price of sugar as well, and India may allow more sugar exports too. That's the word coming in from the Food Secretary. India Food Ministry is in favor of raising the ethanol prices. So the sharp uptick that we're seeing a little bit in something like a Balrampur Chini right now, 2.5% higher over there. Let's fire some more sugar stocks. Dalmia Bharat not seeing that much of a move, but Praj, EID, Dhampur, all of these stocks are making a dash in the green, and a slight uptick is what we're seeing for some of these names. But let's focus and talk about the stock that's the top nifty gainer today, that's Interglobe Aviation, because Indigo CEO Peter Elbers has issued a video addressing his employees following the recent crisis that the company has recently faced. Let's go across and quickly listen into what he had to say.
The worst is behind us. These last 2 weeks have been very challenging for all of us. As Indigo employees, we stood tall and united, weathering the storm together with unwavering support for one another. We restored our network to 2,200 flights today. Given our scale and complexity, recovering such situation in short time is a testament to our teamwork and the strength of our operating principles. Now we focus on 3 things: resilience, root cause analysis, and rebuilding. What we witnessed seems a compounding effect of several factors. Everyone wants answers. Speculations are circulating, but I encourage everyone, please stay calm, focus on your professional responsibilities, and avoid engaging in such speculations. We need a full-scale analysis first. An external aviation expert has been appointed by the board to conduct a comprehensive root cause analysis. Similar disruptions occurred in other parts of the world with large airlines. While every crisis is unique, lessons from others will also help us strengthening our systems.
That's the word coming in from the top boss at Indigo, Interglobe Aviation, doing well today. But on that note, Mr. Subramaniam and Arpit, we'll let you go. Kunal, stay on with us for some